So when you're communicating with your investors, how much is too much? What's the optimum frequency to communicate, and what's too little, what's too much? Most companies and wealth brands will structure their messaging around campaigns. Regardless of the channel, the typical frequency of communication is low, and most often around the beginning of a campaign or when a company has good news to share. Most messaging is targeted at new investors or customers, and most campaign metrics are around new engagement. But investors, especially affluent retail investors, are far more engaged than most companies and wealth brands might think. In the recent Advisir Retail Sentiment Survey, we asked how often the majority of investors thought about their investment decisions. And the surprising finding was that almost 60% of investors thought about their investment decisions daily. And what's really interesting is that we found 90% will often think about their decisions weekly. So this has three implications for companies and brands trying to communicate with retail investors. The first is that your investors are waiting to hear from you, and if you aren't in a conversation with them, then someone probably else is. And secondly, thinking about investments every day doesn't mean buying every day. Messages that educate and reinforce are far more powerful than selling messages. And remember your current investors, not just the new ones. And lastly, messages need to engage to cut through, entertain and inform. Don't lecture and don't be boring, because even insurance can be fun. At Advisir, we help companies, brands and funds build intelligent relationships with retail investors. If you'd like to find out more about retail investor decision frequency and what we could do to help you create and deliver effective messages, let us know. We'd love to talk.